The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. Of course, best wishes and congratulations on your 4th of July celebrations, which are coming up this weekend. Good morning to our friends down under and across the ditch. How's the volume, folks? Can you hear me all right? Just type in the question box, would you please, that you can hear me. Oh, Hank. Hank's the first guy on. Well done. Thank you, Hank and Peter. Hank's down in the Hunter Valley. Good to have you with us. Grandfather of the year. Hank's son's had a baby. Well done, Justin. Fantastic. And Peter, thank you. You can all hear me all right. That's great. Okay, well, excuse me. Most of you in the States, I guess, are getting ready for your holiday weekend, so I hope it's pleasurable and safe for all of you. Down under, just another working day, but I'm not going to be here. I'm taking off down the road. We're now almost unlocked. The state border is still closed. You can't get in here unless you're a Queenslander without doing quarantine. But that's to be lifted on the 10th, so it's starting to loosen up a bit. I'm going on a road trip. Hello, Joel. Good to hear from you in Vero Beach. I'm going on a road trip. I'm driving my daughter back to med school in Sydney, and I'll be leaving as soon as we finish today. And it's about 1,000 kilometres, about 600 odd miles. Down to Sydney, and I haven't driven on that road for maybe 20 years, but they tell me it's very, very good now, the M1, the old Pacific Highway, so that's great. Okay, so do excuse me. Exciting trading times, aren't they? I'm frustrated that the markets are closing. It's been marvellous, but lots of unknowns going on at the moment, so it's a good time to be aware of what's happening. Let's move on. Now, as we know, markets are rational, orderly, and sometimes predictable. Oh, look who's here. Sue's here. Sue, lovely to have you with us from Cairns. Great. Akshay's with us. Akshay's a long-time member. Good to have you. Andrew as well. Chase, the man who got me to stop smoking. Eric S., he's over in not Dubai, but close to it. Eric, he's he's supervising a big nuclear installation there. Well done. Nice to hear from you, Eric and George. Good to have you with us. Keep going. Gosh, got a big roll up today. Graham over in New Zealand. Hank down in the Hunter Valley. Harold up in Redding, California, who's jumping up and down with the way gold's going. And looks like it's going higher, doesn't it? JF, I sent you an email. Have a look that you're looking at the right charts. For example, wheat, the code we use is W2, and that's the combined RTH and electronic session. Well, there's no RTH, regular trading hours, anymore. It's a hangover from the past. All the pits except the big S&P pit were closed some years ago, and in fact the big S&P has been closed for the COVID virus anyway, but the market still clings to its traditions that you have your contracts which will give you just the day session, it's called, which is regular trading hours, and the electronic markets give you the combined trading. So as I was saying with wheat, we use W2 for our analysis, and there's a reason for that. But ZW or ZW, depends how you pronounce it, that's the electronic contract, and most of these markets now have an electronic contract. So have a look at the contract specifications, JF, in the CME website. Go to each market and ask for, look for contract specifications. That will tell you the trading hours. It'll also tell you which are the electronic contracts which you have to trade these days, and that will solve your issues. Jim Kate is with us. Jim, terrific to have you with us. He's just done a tutorial, and he's been very, very sick as well. I hope you're fully recovered and feeling great. Honored to have Joe Biden with us, whoever you are. Where am I? How did I get here? This is Joe Biden. He doesn't know what he's doing. That's right. Sim and Peck from Kuala Lumpur have just signed in. Sim and Peck Sim. Lovely to have you with us. Joe said he was senile as hell. I think that's probably heading that way. But anyway, if you live long enough, it'll come to you as well. Joel's with us. John down in Coffs Harbour. Good to have you with us, John. Justin, he's the father of the year. He's Hank's son down in the Hunter Valley. Keith, he's a long-time DC tutorial guy. Mark, the same. Good to have you with us. Murph, of course, as always. We can't start without Murph. He's always with us, which is great. Here we've got Milton. Yes, good. Ned, yes. Paul, Peter Mack, the day trading guru. It was great. A couple of other Peters. Phillips with us. Scott, haven't seen you for a while. Sue up in Cairns. Sue, hope your trading's still going great. We're always excited to have ladies join us for these webinars because we don't have many lady members and we want them. We should have more. So then, see if I can read this. My computer screen since the last Windows update has got a lot smaller. Theme Tan, lovely to have you with us and welcome. Tim, good to have you with us. Trevor, of course, and Vicky is one of our other ladies who's a long-time Daniel Code member. Great to have you with us, Vicky. So those of you in the States, enjoy your weekend. Those of you not in the States, well, you get a compulsory holiday for a few days. And make sure that you're getting out of your contracts before this long weekend. Grains and oilseeds close at midday tomorrow. You'll see on those of you trading success, make sure you know where your stop is. You all know what a 1 bar stop is. And grains and oilseeds are going to close at midday tomorrow. Everything else is closed on Friday. So there we are. So let's move on. Markets are rational, orderly, and sometimes predictable, which is why the Daniel Code tracks these markets so well. Okay, so let's think about the second half of 2020. The first half is over, and I'm really upset that it's over because it has just been marvelous trading, hasn't it? We say that we always try to take off 1 week a quarter because trading is intensive and you need to take a break. And we've said for years that we always try to take off 1 week and a quarter each quarter. But the reality is that we haven't for years and years and years. And the trading's just too good to stop, isn't it? It is for me anyway. So really, apart from our Christmas break, that's it. We just keep going. But we've lost the first half. It's been marvelous. It's been memorable. Those of you who've been following the Daniel Code, you got short at the right time for the big COVID pullback. You got long at the right time. You've been on the right side of the market all the time. So what we're going to be looking for now is what's happening now. Well, we've got real issues between recovery and collapse. There's enormous tensions in the market. The market's on a hair trigger. And every, decent pullback, which historically would have been treated just as a pullback, is now panic stations. And the market's going to stay that way for the second half. Markets are on a hair trigger, equities in particular. So the unlimited optimism that we're seeing, that's a direct result of central bank intervention on a massive and unprecedented scale. I mean, all central banks, not just the Federal Reserve, but all central banks have just thrown the kitchen sink at this issue. Now, importantly, as you're going to see today, US markets are both the bellwether and the impulse. Where these markets go is vital for the rest of the world. And the present US administration has its hands on the tools with a hand-picked Federal Reserve Bank chairman and Steve Mnuchin as the treasurer, ex-Goldman Sachs. So you know what his instincts are, and you know that he understands what the market needs to keep it going. And his position as treasurer is tied to Trump's fortunes, I think, and I think that's a reasonable assumption. So both of them and all the administration have powerful incentives to keep this market going. So at the moment, the power of the bulls is irresistible, and it's running into a stage of irresistible force meets immovable object. But the impulsive forces in the current rally are tremendous, unprecedented, and a bit zany. For those of you who don't follow trading too closely, Hertz, the big car rental company, went into liquidation some months ago. But administrators report it hasn't quite got to the stage for liquidation, but that's where it'll finish up. But at any rate, when it went into administration, the reports are, of course, the share value is zero. But there's a relatively new website. It's a stock and share website. It's called Robinhood, and they seem to have enlisted the next generation of share traders. They've got kids 11, 12, and young teens trading with reasonable accounts, but their practice of giving credit is extraordinary. The last webinar I told you of a young gentleman who unfortunately killed himself up in Nebraska, and he had a $1 million credit with Robinhood and managed to lose 950,000 of it, and he was a university student with no assets and no job. So it's the old ninja. What's it? No income, no job, no assets. We used to laugh about that with the mortgage origination in 2017-18. But now Robinhood are now the ninja traders of the share market. Crazy stuff, isn't it? But just that enthusiasm is just unlimited. There are, I think everyone's aware that Wall Street is seriously out of kilter with Main Street. There are patches of stress in the wider economy. They tend to be very specifically related to the things you would logically see from COVID, airlines, travel, etc. The real cost of the unusual steps taken by central banks is not on the radar yet, and the steps that the central banks are taking are extraordinary. And unprecedented. They're big words and they're real. So let's have a look what's happening, because currencies, Wall Street's out of control. That's all Trump's fault. Well, the markets are where they are because of Trump. He's been one of the great stock boosters of all time, isn't he? Anyway, currencies are the canaries in the coal mine, and this gets pretty interesting. What we're looking at now is a chart of the US dollar index. Now, that's an index against a basket of currencies. So the question always is what exactly is it reflecting? Because if you want to know anything about currencies, the message is always in the cross rates. So this is the Aussie, and you can see it had a wonderful plunge down to March 2020. We sort of picked this at the beginning of the year of being the best short of the year, and it has been. It's been fantastic. Of course, now it's rallying like everything's okay. And it's not just the Aussie. Have a look at this. This is the euro. It's made its low for the year, at least so far, in March, and it's much stronger since March. Have a look at the rest of them. This is the British pound. It's rallied significantly. It's holding up to it's got some problems, the British pound. They're in the middle of Brexit. It's a forced Brexit that they're trying to negotiate a sensible deal with the European Union, those that remain in the Union, and the EU is purposely making life just as difficult as they can. and they've been able to bluff a number of successive GB, British, UK administrations. Theresa May was hopeless, just out of her depth, and they had it all over her. And it's taken Boris Johnson to say, look, we're going to leave with a deal or without a deal, and mean it. But they've got awful COVID problems. They've got the Brexit issues. They're going to probably not have a deal in the next 3 months, and that all ends. It's going to be compulsorily ended at the end of December. And negotiations between Britain and the EU are going nowhere. So that's a big issue. But look, nonetheless, the British pound has rallied, and it's back into that sort of range that it's been sitting in since August 2016. Extraordinary. This is the dollar CAD, or the loonie, and the US dollar is considerably weaker since that very early April top, the first week of April. It's made its top, and it's been weaker since then. So same dates, look at them. And this is dollar Japanese yen. Same thing, it made its low, all on the same date. So if you're starting to get the picture that markets are much, much more connected than you can possibly realize, then you're seeing why I've prepared these charts to show you. All of these markets all tumbled into March 2020, and all of them, with one exception, have rallied since then. And this is the big exception. This is the Chinese Yuan, and the dollar is so strong against the Chinese Yuan. This is the big standout. This seven exchange rate of 7 has been a real red line for years. And you can see it originally tested that 7 number in about July, August last year. A bit later, it looks like it's more like October last year, and it's been having another go at that line lately. This is so out of kilter with what every other market is doing that you have to come to the assumption that it's deliberate. It's very, very beneficial to China to have a weak exchange rate because they're an exporter. Basically, that's their business as exporters, export everything they possibly can. And for an exporter, having a weaker exchange rate is very, very valuable because it makes your goods more competitive. The divergence with the Chinese currency against every other currency, and you've seen all the majors now, it's so much you have to assume that it's deliberate. And the US administration is certainly well aware of that, but for whatever reason, they're deciding not to do much about it. They have all sorts of remedies, starting with a declaration that China is a currency manipulator, which certainly it is. Of course it is. You only got to look at the charts to see that, but they're not going to do that at the moment. Very, very reluctant. So you've got the US dollar rally against the British pound, which has international issues. They've got a shambolic COVID response. It went from just ignore it and we'll get herd immunity. That's the response Sweden's taken, which has not been seemed very clever for a while, but it's not looking so flash now as the death rate keeps mounting. To the other extreme, that they started down that track and then got a lot of deaths and said, yikes, we're in trouble, and changed horses midstream. But the damage that's been done in the UK is huge. So undoubtedly US administration's aware of what we've been talking about with the yuan, but have chosen at this rate to do nothing about it. So what happens in the second half? Well, equities stay strong, I think, with only minimal corrections. There's all sorts of things happening in the world that you would think could have some impact. I mean, you've got India and China having a stand-up fight on the border, on the northern border of India, with soldiers being killed, and now they've got tanks on each side facing each other. That's the sort of thing that usually would have had some result on equity markets. It hasn't even been noticed. It's not even a blip on the radar. So the US centricity of these markets, which is what I'm trying to point out to you, is just so centered on US sentiment, because the US is the powerhouse of the market. And it's going to take something pretty drastic to change that trajectory. I think the US dollar continues to weaken. Trump and Nugent both want a weaker dollar. They've been pretty restrained, really, is what they've done with it, but I think that probably goes through the year. It continues because I think the sort of social problems that the US is experiencing go on for a long time. And some of these states and cities have just a laissez-faire attitude that's going to come back and bite them. See what's happening in excuse me, New York City with $1 billion being taken out of the police budget. I mean, whoever thought that was a clever idea? But anyway, it's been done. And Dr. Copper has staged a strong rally since March 2020. You saw that. Now, we call it Dr. Copper because it's traditionally been a real bellwether as to market health. And that's simply because it's used so pervasively in industry and in residential buildings. It's such a core material of modern life that it's got to these days be called, for many years it's been called Dr. Copper, on the theory that when copper's doing well, the economy's doing well. And I think the real economy in these powerhouses, US in particular, is doing very well. The news, of course, all you ever see is the drama, but that's what news is about, I guess. As Joel says, when's Main Street going to wake up to the fact that a lot of this stuff is smoke and mirrors? Well, the answer is it's not smoke and mirrors. It's $3 courtesy of the Fed. The amount of money that is being spent not only on propping up corporations one way and another, but buying of bonds, just one level, one tick above junk status, and the Fed's buying them. I mean, when I say this is unprecedented and extraordinary, I really, really mean it. The bottom line, however, is that we've had that key tipping point. Every market, with the exception of the Chinese currency, made that important pivot last week of March, first week of April 2020. And nothing at the moment looks like it's going to retest that. And the US capacity to recover and boost production is unparalleled. These issues of the constant issue, isn't it, of do we take what the health professionals are saying and shut everyone down, or do we say what the business people are saying? The cure can't be worse than the disease, and the damage that's been done by forced lockdowns where they've occurred is significant. But the US has the capacity to recover and boost that production. Its capacity is unparalleled, historically and presently as well. So commodities, if you just look, this is the Goldman Sachs Commodity Index, and this is a 12-day chart. Each bar is at 12 trading days. It's barely recovered. It's struggling to get over 50% recovery just from the minor swing. So commodities are very seriously depressed. They've had their bounce, but they're not going anywhere. They're not even attacking the major swing at this stage. They're just trying to correct the minor swing, and they can't get above 50%. So commodities are weak and stay weak because the chart is telling us that all they're trying to do is correct the minor swing, which is not a view of stealth. This is Harold's chart. He can get even more excited about it. Gold continues on this tear. I mean, it's just marvelous, isn't it? It's just doing so well. And the 1827 black line, that's the Daniel code black line, which is the last level of support or resistance in any swing. If this market closes, it has a daily close above that number, it's going to make new highs, and the probability is it certainly looks like that now. It's a very exciting time to be a gold bug, and Harold, of course, in Reading is the king of the gold bugs, and a lovely guy. He was most hospitable to me when I was in Reading some years ago. So let's have a look at this chart. This is one that I show you periodically over the years. This is UST bonds. This is our long-term chart, and it starts with a Daniel code trading channel running from February 2000. So this same channel has been controlling UST bonds now for 20 years. Have a look at that. It's extraordinary, isn't it? Anyone who thinks markets are random, you need to look at these Daniel code long-term charts that I show you periodically. And what's happened here, the all-time high in UST bonds. Now remember that treasuries, the charts are reversed. So up on the treasury chart means down in interest rates, and vice versa. Down on a treasury chart means up in interest rates. So the all-time high on the UST bonds, you can see it just stuck its head through the upper Daniel code trading channel level, which is 2 standard deviations from the thicker red line, diagonal red line, which is the mean. And the standard deviation is not your normal mathematical standard deviation, it's a Daniel code standard deviation. It's one of the Daniel code core numbers that markets all resonate to. But that particular count started way back in, here we are, about October. I put the blue arrow on to show you up the top. That started in October 2004. Have a look at that. Late October 2004 was the start of that particular count. And you can see it went out 59, 89, 118, 148. So that's a 59 cycle, a time cycle. And 59 is 1. So this is, and when I say 1, I mean that is time. That's one of the primary Daniel code numbers for time. 59 is actually twice time, but it runs on its own time cycle proportionately. So that's actually times time and a half. The all-time high, there's too many time words in there, isn't it? The all-time high came on the cycle of times, Daniel code cycle of times and a half, exactly. I mean, that's the 148 number you can see there. Extraordinary, isn't it? That after all these years, that's 16 years ago, that time cycle is still running so accurately and perfectly. I mean, you know, we can say this is interest rates are unparalleled, out of control. You can see lots of commentary that people who don't like low interest rates, I don't know why anyone in business wouldn't like low interest rates, but there's a whole lot of people, commentators saying, oh, you know, isn't it dreadful, and it's all the Fed's fault, and et cetera, et cetera. But the reality is that this market, since 2000, has run exactly inside 2 standard deviations of its Daniel code channel, and it keeps making these important turns right of the Daniel code time cycle. Now, these are long-term time cycles. Each bar on this chart is 24 days, but I often say the Fed follows the Daniel code. Well, they probably don't intentionally, but because of what the Daniel code is, that it's really charting human emotion as much as anything else. The Fed just keeps making crucial turns and decisions at these Daniel code numbers. That's what all these arrows all over this chart are, to show you the various cycles that this market's hitting, and you can see some future cycles there as well. But there we are. There's nothing out of the ordinary with this. It's actually perfectly organized. went exactly, or just a tick through 2 standard deviations from the mean. Did it right exactly on the Daniel code time cycle. Pretty fantastic, isn't it? It's all normal, it's all orderly, it's doing whatever it has to do according to the Daniel code cycle. And that's a lot to think about, isn't it? Okay, let's move on. So here's a chart of copper. You can see it made its low with all the drama at the end of March, early April. Look at its recovery. I mean, it's roaring. It's well over its 50%. It's actually testing exactly 74% of the minor range, and it's got to keep going and get through that to start holding those crucial price levels that you see there. And it's been a good trading market recently, copper, hasn't it? So the point here, here's your equities. Look at this, exactly the same thing. All markets are connected. We've gone through all of the currencies, the significant currencies that have US dollar pairs. We've gone through all of those. We've looked at a number of other markets, including some commodities. All of them did exactly the same thing. They all made their low last week of March 2020 or first week of April 2020, with the exception of the US dollar Chinese yuan pair. Look at this thing. There's the black line, 3263. A close above that black line implies new all-time highs. But this rally has been extraordinary. No wonder all the kids on Robinhood got excited. And of course, have a look at this. This is the NASDAQ. And quite clearly, the world, the investment community decided that the great disruptors in the NASDAQ that have technology-based solutions where they're not dependent on massive numbers of high-priced labor, the sky is unlimited. And you know, if you tell me back in 2000 that the market could go to these levels, I don't think there'd be many people who put their hand up and said, "Yeah, I think it will." It's extraordinary, and this rally up in the NASDAQ is just super impressive. You can start putting some trend lines along the bottom of this whole rise, and you can see that it's pulling right away. It's entering a blow-off stage. Now, how long that'll be, I don't know. But it's certainly, once it gets into that blow-off stage and starts losing its sharp base support, the end is coming. The Russell, this is the small caps index for those of you who don't trade. It's a very good trading market, and it has a considerably smaller margin than the S&P at the moment. The S&P E-mini margin's up around $13,000 now for the S&P E-mini, and this market is, it's impressive, but it's trying desperately to hold 3 standard deviations from the mean. But look at that rally. It got to 74%. It was like it was shot with a gun. It just stopped and died. And it's struggling, but it's holding 3 standard deviations from the mean. As long as it does that, it has the potential to go higher. But you can see the complete disconnect between the high-tech stocks on the NASDAQ. Russell is a small-cap stock. These are companies that have small cap and don't qualify to get into the S&P. Okay, let's see what next we've got. Well, this is gold. This, in fact, is 6S on gold. Those of you who are not looking at the 6S trading program, do take a free trial and have a look at it. I showed you this chart for the good and the bad. You can see that there's some part of $10,000 being available as profits just in the month of June, which is pretty impressive considering the margin of gold. That's a big number, a big return. But look what's happened lately. You've had 3 outside bars, the bane of all traders, 3 outside bars, including 2 back-to-back yesterday, or for where you are today, and yesterday. That's horrible. I've put a cross on it saying fail. It's not really a fail. We got short, but this is one of the rare times that we've got reversed when we've had a full big one-day risk on it. So watch your risk when these markets start getting bigger and then the volatility comes in. Make sure you're having a look at what the average true range is. There's a tool you can add to your charts in Trade Navigator. It's called our average true range. That's the one you want. And you can adjust the setting of the time it's calculated over to whatever you like. I have traditionally excuse me, used a long period. I've used 225 days. Doesn't mean anything. 255 days is the number of trading days in a year. 225 is just a big number. But the longer the number, the less volatility you get in the change of the average true range. And for some of these markets, the volatility is so high that you want to get closer. I've just redone all of the success cycles, particularly the discretionary trailing stops. They're a dollar stop. That's a fraction of the average true range. You might need to look at a reasonably shorter period for your average true range. 59 days, if you like. I wouldn't get a lot shorter than that because you want to be a harvester of volatility. You don't want to become a slave to volatility. And if your ATR period of time is too short, you'll be doing your ATR calculations every 3 days, which is truly counterproductive. You don't want to even look at those figures except on a fortnightly basis, minimum monthly basis, if you like. Fortnight's an expression I use. It means 14 nights or 2 weeks. I know it's not an American expression, so I have to clarify myself when I use it. Okay, so gold's been tremendous for all sorts of trading. And have a look at this. This is soybeans. $1,700 in 2 days, and it's got a very modest margin. Those of you who are trading grains, so look at this. This is a beauty, isn't it? This was a success buy. It was a TO3 buy, and it was a blue line trade in the TO3 Plus program. So all of these, all of our markets picked this turn exactly to the tick and to the day. Now let me just see how accurate that is. So the low, the blue line trade actually came from June the 26th, and those of you who follow the Daniel code will know that target recognition is valid on the bar high low or the close. The soybean was going down into that low, so we looked at the low and the close, and the close of June the 26th was 861 carat 2 against the Daniel code blue line at 861 carat 0, so 1 tick variance on the close. That sets up the TO3 trade and the blue line trade. The next day you've got a right here on this little bar right here. This was Monday, June the 29th. Put my cursor back there again so you can see it right there. June the 29th, you got a key reversal bar, key reversal. The low of that was 856 carat 6. And the DC number was 856 carat 4. So the difference between carat 4, carat 6 is 1 tick. Grains go up in quarters. So extraordinarily accurate, and that's what set off the buy signals. And of course that buy actually launched from a blue line number, as you'll see when you look at the Daniel code charts when they're updated. Incidentally, folks, I'm not updating the charts today. Normally I would do the charts later this evening, update them, but it's only a half day trading tomorrow. Volume will be very light. and Friday the same. It'll be very light, and I've suggested that you use the next little period of time to close out your trade, turn off your computer, take a complete break over the weekend, spend time with your family and friends. And I guess you can't go rafting in Texas. I think that's been stopped. Most of the beaches in Miami are closed, aren't they, Joel? But I'm sure you can find yourself a wonderful time with your friends and family, and I hope that you do have that. Okay, so there's the success for you. So what are the risks to these markets? Well, the US market set the tone for others, and you may not have realized before today just how pervasive the US markets are. But the whole world that we're interested in from a trading point of view, at least, is just, as you can see, we've gone through currencies, commodities, equities. They're all tied to the dominant market, which is the US market. And I'm sure you didn't recognize just how related all markets are. That's because we don't spend nearly enough time what's Jim saying to me? Bullock Street. Oh, Calandra. Right. Thank you, Jim. We don't spend enough time looking at long-term charts, or you don't spend enough time looking at long-term charts. I'm always fascinated by them. But this absolute US-centricity, the dominance of US markets, if you weren't aware of it before, surely you are now. So, the future of trading is very, very much tied to what the US markets do. They set the tone, and what are the risks of the market? Well, debt's the first one that comes up, isn't it? The debt is massive. It's increasing exponentially. The amount of money that governments have thrown at softening the blow for workers, for people who are in lockdown and can't go to their job, for those who've lost their job, for corporations whose business has been impacted. The dollar amounts are just staggering. Just staggering, and they're so big. I mean, maybe a economist who's interested in those things get his head around it, but to most people, they're just massive amounts of money. They're just so unreal. But the interest rate environment that we're in, I mean, normally when we've had any troubles with the market in the past, the Fed's first reaction has been, let's slash interest rates. And that's been done by central banks all over the world. When I say the Fed, US Fed leads the way, but all the other markets essentially follow what the US Fed's doing. So that's been the traditional safety valve, if you like, or shock absorber for any market problems. What's happened now, though, is that interest rates are so low that realistically the Fed's lost the use of that tool. Interest rates are less than 1% for major economies, and those that issue their own currency, well, you know that the printing press argument just goes on and on. But this low interest environment didn't happen by accident. It's a creature of central banks. The US Fed, the European Central Bank, such as it is, which is really Germany, they've all followed that same track of lower interest rates, and sloshing amounts of liquidity. And this is something that's been a creature of the Fed. They haven't ever had I think they've tried a few times to sort of put the brakes on and inch interest rates up. Every time that's happened, US equity markets have had a tantrum, and that's frightened the Fed, and they've just gone the other extreme now. So the argument is that debt doesn't matter until it matters, and this low interest environment is a creature of central banks. It's not like the old days where interest was paralysing to government. It's not. Interest rates are so low. What are the other big issues? Well, COVID. I'm now cautious but quite sanguine about the COVID virus. I think what we've done throughout the world is we've had enough experience now that we know how to deal with it. And I know that it's pretty dramatic in the southwest parts of the states at the moment, but that's the function of being Americans. I've got to show you as we go along. But for traders, the next big issue is not COVID-19. COVID, the whole virus and response and reaction to it. People know what to do about it now. Governments know the steps they should take. They may be reluctant to take them, and plenty of them have stuck their head in the sand, including Trump saying, this will go away when the weather gets warmer. This will burn itself out. Well, I don't think that's right. And we're seeing that now. But authorities know what the proper responses are to outbreaks of COVID-19. And you don't have to shut down the whole country anymore. That issue of the real worry for everywhere, New York, Britain, Australia, Europe, everywhere, was that if this thing took off at the beginning, which it started to do in some countries, it would overwhelm the health department's potential services. And that was the great worry. And that's what happened in New York, that it gets so bad that the medical system is overwhelmed. And you saw that in graphic and horrible detail in New York. You saw it in Italy. There are other countries where the same things happen, but we've had less visibility to it. But that's over now. Governments know how to control this thing. They don't know how to get rid of it. We don't know if there is now coming up or if there ever will be a vaccine. But governments know how to control this. And yes, there's a certain cost to doing that. But we're past the stage, I think, of worrying that the medical system is going to be overwhelmed. You may still see various hospitals getting overwhelmed in some districts, but on a macro basis, governments know how to avoid that. So for us, traders, the next big issue is the presidential election. Trump's the market's best booster that anyone's ever seen. I don't think there's any doubt about that. The cutting back of regulations, the tax cuts, the yap into the market all the time, making sure that people he's got working from are of a like mind. He's just been extraordinarily successful as a salesman for the markets. And that's what he's good at. He's a salesman. He's a supreme salesman. And that's his go. And he's been very, very good at it. So you've got Trump, the market's best booster, versus Biden. I don't know much what you get from Biden, but I do think you get Obama version 2. Because the people that Biden has served with and knows intimately, by and large, they're all Obama graduates, if you like. And I think, Obama wasn't disgraceful or anything bad for the stock market. It was steady as you go. And he had some big issues himself, remember. Don't forget GFC and the steps that were taken under his administration to bail out all those naughty corporations. Most of whom didn't deserve to be bailed out. But the other thing is the particular issues with America. I mean, I don't think they're life-threatening. I don't think they're even market-threatening. But you have to be aware of it. USA was born by revolution. America revolted against its British rule as the king, successfully too. And historically and culturally, America is just steeped in these concepts of individual freedom. And it's inherently suspicious of authority, which is a good thing. But those sort of emotions and feelings, they're part of American culture. American music is constantly freedom, liberty, American national anthem. People talk constantly. Freedom and liberty is a front of the mind thing for Americans. And it's not that so in the rest of the world. Asia has got more or less bits so stronger or not so strong of Confucius type sentiment. Now, Confucius was a Chinese philosopher, and his philosophy emphasized personal and government morality, correctness of social relationships, justice, kindness, and sincerity. And a lot of that is in all of the Asian cultures. They're people who respect their authorities, and with very few exceptions, Hong Kong's one. With very few exceptions, and Hong Kong, of course, is a special situation. China there is reneging on the deal they did with the UK when Hong Kong reverted to China. But Asians generally are respectful of authority. They're biddable. They do what they're told. And they're societies of order. Europe is largely derived from feudal societies and monarchies. Generally, they're people who historically they've respected authority. They've been ruled by authorities. All that's really happened there is that the authorities have changed. Instead of having kings and queens, they now have the bureaucrats in Brussels who are just as avaricious, if not more so. But that was their choice, and they seem happy enough with that. USA has these special gifts and special issues, though, doesn't it? That nowhere else in the world will you see people on a daily basis complaining that lockdown, restrictions on travel, restrictions on how many people you can meet with and where you can do it. Nowhere else will you see this constant refrain of my freedom. It's the "don't tread on me, snake," the first flag, isn't it? Nowhere else is it so front of mind that Americans are always on issue about freedom, liberty, my rights, my personal right. So USA has special gifts, and they come from historical reasons, but it also has special issues, doesn't it? And those are playing out on a daily basis. So let's contrast that, if we can, with the Australian and New Zealand experience. It's been a lot easier for us because Australia and New Zealand are islands, and folks respect lawful authority to that extent. They're biddable. And the government can turn around, as it has done, and say, okay, well, we're just going to close the country up. That's step one. No more flights in or flights out, with the exceptions being that the government's managing substantial numbers of flights, special charter flights, to bring expatriate Australians home. And just excuse me for one moment, please, folks. I apologise for that. Some of you would have heard the dog starting to bark at the door that he wanted to come in, and the rest of the folks here seem to be deaf at the moment. Anyway, I do apologise. It's been comparatively easy for governments in Australia and New Zealand, and shut down the international airports, shut down, in many cases, states have closed their own borders, enforced quarantine for returning travellers. Now, I mean, you're going to laugh at this if you're of a cynical bent, but there's a joint set of government, a joint federal caucus now, which involves not only the leaders of the federal politicians, but the leaders of the states. They all sit down together when there are big issues like COVID and decide what to do. And they decided this issue of returning travellers was a big issue because honestly, the folks coming home from overseas have just been, excuse me, overwhelmingly providing the COVID infections. So the Cabinet decided that all returning Australians should be go into compulsory quarantine. The government's paying for all this, mind you, which means we taxpayers are paying for it, and they've got thousands and thousands of these people coming back from overseas on special government chartered flights, and they're coming back from visiting their families in Europe or India or wherever their sort of family roots are, and they have to go into quarantine. And they go into hotels, which has been a boon for hotels, which have lost the tourism business, but the government books out whole hotels, and people have to go into these hotels for 14 days, and then they're released. And this is being, of course, supervised. The agreement was it'd be supervised by either the army or by police. Well, that worked very well everywhere, and New Zealand became completely free of COVID, and Australia became very, very close to completely free. And then, of course, human nature plays its part. In New Zealand, it was as simple as a couple of women wanted to travel to a different part of the country to see their aging father for his birthday, and somebody agreed to that, and they'd returned from overseas. They let them out of quarantine without a test, and before their 14 days were up, so they drove down to the South Island, I think it was, and started a whole new run of infections going. In Australia, the stories are slightly different. Every state except Victoria, which is one of our most southern states here, they have got a bit of a history of doing things their way. They think they're the rulers of Australia. Largely, I don't mean to offend any Victorians who are with us today, but they all agreed to do the quarantine this way, keep people in these hotels, keep it managed by defence personnel or the police, make sure they did what they were supposed to do in quarantine, that is, stay in your room. And of course, but Victoria decided they wouldn't do that. They'd use security contractors. So they let out three large contracts to three large security corporates without vetting them, and very minimal training. Some matters of hours training, which really means you got a half-day training session. We've all been to those. Not much really changes place. And today we've got, and of course, Victoria's exploding now with 30, 40, 50 new COVID infections a day. How did it all happen? Well, it turns out that these security people were not taking it very seriously. Some of them were found asleep on the job. Others were clocking in to get that payment, but registering also for the JobKeeper payments. The state government, federal government's paying people who've lost their other job. They were moonlighting. And today, horror of horrors, they were sleeping with these travellers. So it was get paid and have your entertainment as well. So everyone in Victoria is greatly offended. There's going to be a Royal Commission into it. But really, it's called human nature, isn't it? I mean, the best designed bureaucratic plan, human nature will find a way to defeat it. And there you are. So we know we've got the model. We know how to control the virus, lock down those areas, but it's not sustainable indefinitely. In the America and the United States, it's less sustainable than anywhere because people demand their freedoms and see these the actions by government, which is designed to protect and save the community. Americans keep a significant proportion of them keep insisting on seeing that as a violation of their personal rights and freedoms, so more than anywhere else. So that's what happens. Okay, so we've come to the end of today's webinar, folks, and thank you for being with us. Those of you who have not already done so, you should be considering now is a great time to learn to trade. And if you are interested, please email me, jneedham@thedanielcode.com, and I will turn you into a super trader. It is a wonderful gift to have. Once you know how to trade markets properly, you have that gift for the rest of your life. While things are maybe a bit quiet with the COVID, you might be in lockdown, your business might be restricted, there might be other reasons to say now is a really good time to upskill yourself. Send me an email, please. I'll be happy to send you the details on the Daniel Code tutorial, which will teach you everything about trading time and price. It will turn you into a super trader, and I would be happy to do that. The business of trading futures and forex is not to be right. The business of trading, all trading, is making money. That's what we do. It's a wonderful industry to be in because despite ups and downs and the travails of outlandish fortune, markets are always there for you. If you haven't already, please take a free trial of the Daniel Code. Go to www.thedanielcode.com. Just register, and Terry will switch you on for a free trial. Any issues at all, contact Terry at support@thedanielcode.com. Terry's been traveling and out of the country for a little while, but he's back now, and while I'm away over the next 3 or 4 days, Terry's here for any of your inquiries as well. Finally, this is the disclaimer. Well, this is our statement of risk is really what it is, and it's our risk disclosure statement. I do really ask you to read this and pay serious attention to it, and I beg you, do not risk real money trading until you are really confident that you know how to trade. I can promise you that it's really easy to lose money trading, really easy. And once you've learned the Daniel Code trading method, it's even easier to make money. So I'll look forward to hearing from a whole lot of you. Okay, that's it for the moment, folks. Let's see who I haven't answered here. Great to see Jim Cater back and well. Akshay, so-and-so, T-Bond chart 59 cycle analysis. Like this, could this become the tail that wags the dog? Equities in time to come. Yeah, it has to be. Actually, it has to be. So what are we going to do? Mike says, Murph says, what? Safe travel. Thank you, my friend. Look forward to next week. You bet. I'll be seeing you. We're doing a little catch-up together, aren't we? Which is fine. Keith, thank you, Keith. John L. down in Coffs. Good on you, Hank. Thanks, mate. You too. Thank you. And Sue, yeah, I've got a long trip taking my daughter back to med school in Sydney. But we've had her here for almost 3 months, unexpectedly. And we've had all the children, well, both the children home. And it's been great. Thank you, folks. Have a safe and wonderful weekend. And we'll be back to work next week. All the best. Bye-bye for now.